to the low. It's very important. And with pivot point analysis, once again, it's a guide, it's a tool. It's kind of like a handrail. You're not putting all your weight on that handrail, as you walk downstairs, but you're just using it to help your balance. Well, that's what pivot point analysis should be used for, helping you to determine a balance as to when to enter a market or exit the market. Now, one of my main focuses in using pivot points is multiple time frames. That's what I'm really known for. In fact, I'm probably one of the world's foremost authority on pivot point analysis. I've been using them for over 26 years. I've written so many articles on them for various publications, and in fact written a book. And some of you may know that there's another book coming out through John Wiley and Sons, which will talk more about pivots with ETFs and stocks and futures. And boy, I'll tell you what, there's so many different trading vehicles they work just unbelievably well with. You can apply these in pretty much any facet of investment vehicles that you're personally invested with. So I also wanted to let you know that it's not just for Forex. It just works amazingly well in foreign currency markets. But when you add up the different time periods, and since there are approximately, of course, 5 business days in every week, and since there are 4 weeks in every month, usually one day will mark within that month will mark a high, and then one day within that month will mark a low. So why wouldn't you want monthly support and resistance numbers in front of you every trading day? I understand I only have to figure them out once a month. Weekly numbers, I only have to figure them out once a week. So they're just an additive tool to help you. Time is very important, and what market opinions are made on, market opinions are also changed on in the various time periods. We might be bullish when we leave every day, and then next morning something happened and everyone's all bullish now. So you go from bearish to bullish cycles in the market, and it happens over time as people readjust their thinking or their opinions on the perceived market value of a given product's price in a given time period. So once again, market analysis has a lot to do with not only price, but also price within a certain time period. And that's why it's important to use monthly, weekly, and daily numbers. Now, with confluences, what we're doing is we're looking for the pivot point calculations to line up within the different various time periods. So the more confluences or numbers, the coincidences, let's call them, that line up within the various time frames of the pivot point calculation values themselves. And I wanted to actually give a better description. A pivot point calculation value could be R1, R2, S1, S2. And for those, if you want to experiment with the R3 or the S3 numbers. So if there are a day, a week, a month where a lot of the same numbers coming up, pay close attention to that price level. It'll give you a stronger certainty for a market reaction off of that support or resistance number. So once again, the more confluences or corroborating number adds to the significance of a specific target area. They work to pinpoint almost exact times and prices for trades in the various markets, and they can be used to validate other analysis. Let's take a look. Not all the time will we see the monthly R1. It could be the monthly R2, or the weekly R2, or the weekly R1, or the daily R1. But if these levels, and they're not always going to be exact, but I tell you what, they'll be pretty darn close. So once again, the more the numbers line up, you'll want to heighten your awareness to that price region. And if it's resistance, you want to pay close attention to any type of a sell signal to take advantage of a major reversal. Now, let's take a look at the US dollar, Japanese yen. Now, this was kind of interesting because as I talk on Forex TV as one of their market analysts and commentaries, the market, I was telling people back in late November and early December to watch for a major reversal. And again, at the beginning of December, we had our monthly numbers, we had our weekly numbers, we had our daily numbers, and look what we had happen. The weekly resistance, R1, was 121.88. The daily R1 was 121.16, the monthly number 121.04, and again the actual high here was 121.40. So we're looking for something to give us a sell signal. Now, if the market's truly bullish, what should we see? If the market is truly bullish, what should we see? We should see a higher high